Is this a new bull market or a continuation of a bear market rally? That's coming up on 3 Minutes on Markets and Money. Lots of debate right now between whether this is just a bear market rally in the midst of an ongoing bear market or if this is the beginning of a new bull market. Lots of articles being written in both cases right now. The question is who's going to be right? From a technical basis, markets have been improving here as of late. And again, as we kind of look at our chart and go back and kind of review where we are, markets have rallied nicely off these bottoms, and again, has been a very nice pattern of rising tops and rising bottoms, and that's really led the market back up to this resistance level, back to where we were in June of this year, as markets kind of peaked right here at these previous lows that had been set back earlier in the year. So again, as markets have rallied here, we've come down, rallied, broke support, rallied back to those previous support levels, turned those to resistance, rallied to new lows. Now we're back to that previous resistance level. So the news here certainly looks at the moment like a bear market rally. And if the market rally does fail here, then that will certainly confirm that this bear market rally was indeed just that. However, there are some indications that we are starting to see more bullish action within the markets. We talked about yesterday that the 20-day moving average had crossed above the 50-day moving average. That's now providing new support for the markets. But markets are very overbought, and we're just about to trigger a new sell signal on the markets in the short term. In fact, markets are pointing a bit lower this morning, and so if we do see a sell-off today and negative price action for the day, we will kind of confirm this short-term sell signal, which previously has been pretty good indicators that markets were going to have a decline in prices. Now, the question is, how far will that price decline go? Well, if prices decline back to this crossover of the 20-day, 50-day, hold that support level, work off this overbought condition, that sets the markets up for a continuation of this bull market rally, again confirming a rising trend of higher bottoms. That's a very bullish sign. Certainly would augur for some additional exposure to equity portfolios. A violation of that support level, again, this is really going to be that kind of the critical demarcation point. A break of those support levels are going to have a retest of these recent lows and probably set new lows as we continue on with the bear market that we're in. Again, with the Fed hiking rates, tightening monetary policy, slowing economic activity, that's certainly going to weigh on earnings and outlooks for companies. That's going to cause a repricing of stocks near term. But if the Fed is closer to stopping, as a lot of people are expecting right now, that may help augur for this point that, well, maybe the economy is about as bad as it's going to get. It's not going to get any worse. And so maybe things can start to get better. Again, you can make a pretty good case on both sides of this. And this is why we continue to suggest right now, just let the market do what it wants to do. Keep a little bit of extra cash on the sidelines. Look for opportunistic areas to, increase exposure to equities. Trade it accordingly for right now. But I wouldn't make any long-term bets at the moment until we get better clarity, really from the Fed, about just how aggressive they're going to be in terms of combating inflation, and when the market really kind of starts to align itself relative to what the Fed is really saying. Right now, there's a big break between the two, and that can't really last for very long because, again, as always, the Fed is going to control the price action, at least in the shorter term. That's 3 Minutes on Markets and Money. See you back here tomorrow.